It is time. Hi, I'm Rashid Hill, and I think you know that by now. This is episode 2 of the Blockchain Speaks. Yes, it is a audio on a video platform for your viewing and listening pleasure. It is exciting to be doing episode 2 of 4 of this particular series of Blockchain Speaks. Yes, we're going to talk a little bit about Ethereum. We're going to talk about the second layer, Ethereum layer number 2 network. It is called Hermes. Don't ask me why, because I haven't done that type of research yet. But I will give you a highlight of what's in the news concerning Ethereum layer 2. But before we kick that off, I hope you're having a great day. I hope you're having a great month. I hope you're having a great life. Why? Because that's what it's all about. I've had some setbacks recently in my investments, but you know what? Every time I look to the right and I see something going in the red, I flip the page and guess what? There's other investments are in the green. So there's a balance there, right? This is the way it is supposed to be. It's designed that way. If it wasn't, we would all be going crazy, either too happy or too sad. So hey, let's get right to it. Blockchain Speaks episode 2. Do you know what a special purpose acquisition company is? Well, that's all the rage now. The special purpose acquisition companies called SPACs. Yep, SPACs is a word. I know you're like, are you kidding? No, not kidding. It's a real word. Well, we're going to talk a little bit about Coinbase. Coinbase is the topic. If you're talking blockchain, if you're talking cryptocurrency, I mean, if you're talking altcoins, if you're talking Bitcoin or Ethereum, Litecoin, and the like, you know Coinbase or Gemini is going to come up in the conversation. We're talking transactions, we're talking exchanges, we're talking about wallets. Those are the key terms in that particular conversation. So, knowing that, I think my audience knows that Coinbase has decided that they're going to pull off this direct listing versus IPO. You know what IPO is, obviously. Initial public offering for companies to go public so they can basically acquire more shareholders or stakeholders, raise some funds, and share some wealth. And if they do it right, if they have the backing, if they have the standing, so to speak, in the community that follow them, they could do very well. And if you're in a space of blockchain type companies, cryptocurrency being obviously the number one space, then Bitcoin has propelled any company that deals with it into the light. Therefore, yes, obviously Coinbase is looking pretty attractive when it comes to a stock price. All right. So I want to highlight something. I read something today that was talking about other companies that were using SPACs to play like part of the rise of Bitcoin. Helping to boost Bitcoin to the whole nother level when it comes to mainstream. And so these SPACs are really involved in getting companies listed. So if you're in that space, if you have Bitcoin on your books and you're not a public company, then SPACs have kind of jumped in and says, hey, look, don't worry about going through the IPO range. You got to pay a lot of money, you got to do a lot of distribution as far as shares, and you really have to go through a lot of paperwork, a lot of setup, and it's very costly. Or you can go the route of a SPAC, special purpose acquisition company, and let them pretty much, it's a campaign. They promote you, they campaign for you, they try to get the highest price they can out of the crowd and audience that follows you, and then boom, direct listing onto one of the platforms, NASDAQ or New York Stock Exchange, or whatever it is. Anyway, I haven't done that kind of research, but I do know that they are kind of it's kind of like an ICO replacing an IPO. So you got a SPAC or direct listing replacing the IPO. So all of a sudden, IPOs are becoming obsolete, depending on the popularity of the actual company that is going out there and making it happen, right? So if you love a company and you're crazy about that company, you're a mad tribe following that company, and they go public through a direct listing, and you know about it because you follow them, you'll probably pay any price for that because you want to be part of that. That's their expectation. But let me give you this for food for thought. Because, yeah, they're like the next Amazon or maybe the next Zoom. But I think in their minds, they are believing that they're the next Amazon. They have the clout, they have the backing, they have the proof, they have the longevity, and definitely they have what's going to be in the future, digital currency. So, and they're promoting and growing and providing better service all the time. Yes, of course, they had their bumps in the road. They had the issues, and I mean, I'm not here, to elaborate on the negative because it's not relevant. Because they had some bumps when it came to the whole movement, when it was, the diversity and inclusion type situation came up after a lot of the people of color, being blacks or Asians or the like, were being treated publicly more so, than in the private, because there's always been something happening behind the doors. But now it was out in the open, and the nation kind of felt like it was enough of that. Let's do something about it, and let's start to, instead of closing the doors and leaving that nonsense behind closed doors, let's open the doors and start welcoming progress and change. And so Coinbase wasn't outside of that. They didn't escape some of those things with some salary disparaging. When you have a black person making much less than the white person, but they both have the same qualifications. They both are literally sitting and doing the same job. So that had to be dealt with. Now, I'm not saying that that's why I'm even here to talk about it, because I'm not. I don't think it's relevant to the topic at hand. But it was something that came up. And I bring it up because I want to let you know that even though Coinbase has fees that sometimes are very high, and Coinbase sometimes, they are a victim to the network being congested. Overall, no matter what they've done within their company, they have excelled at being the stable, secure avenue, clearinghouse of sorts for cryptocurrency, and definitely for the novice that has no knowledge about how that works. And so I can only applaud them for that. And therefore, let's move on into, boom, that direct listing going on to be a public company. We can argue the point about a peer-to-peer industry having a public offering by the company or the agency that's playing the middleman for the boost and the momentum and the next level of attention getting for the whole industry. I mean, it is a very weird dynamic, right? I don't know how that's going to turn out. I don't know if you're going to get the acceptance that they want, but it seems to be working right now. And at the end of the day, this is the world we live in. So somebody has to monitor transactions on one side or the other, or both sides. Somebody's got to sell, somebody's got to buy. Somebody has to stand in the middle and say, good, not good, price a little high. Hey, that's reasonable. Well, give me, 0.3%, and I'll make sure that works out. And there you go. Coinbase was created. So I read that the former New York Stock Exchange president, a guy named Tom Farley, interesting guy. Did you know that he invested? He was the former New York Stock Exchange president. He actually has a company called Far Peak Acquisitions. Yes, it's a SPAC. So they actually help companies go public with direct listings. This guy has invested $75 million in Coinbase. He did this back in 2015. The former president of the New York Stock Exchange. I found that very interesting. This is in 2015 that he invested $75 million in Coinbase, which meant, and it still means, It was the largest investment ever made in a Bitcoin company at that time. Well, okay, so not today. At that time, because obviously we know the grayscales, we know the micro strategies. Um, so we definitely not the largest. But what's the other one called? Bridge, something Bridge, Sky Bridge. Yeah, with the Anthony Scaramucci. Yeah, these guys are dropping lots and lots. I mean, you got 75 million dollars invested by this Tom Farley guy, and then you have Elon Musk that purchased 1.5 billion dollars worth of Bitcoin. So I think 2015 he was the man. But 4 or 5 years later, we kind of he got overshadowed by real investors. Um, but yeah, so I found that interesting, right? But he did call Bitcoin a growth market. He believes in the industry, and so he's very interested in this, making sure that this Coinbase offering goes off. And he didn't say, but since he's part of the SPAC community, special purpose acquisition company community, then I'm sure that is his preference, even though he was the former president of the New York Stock Exchange. I just find that very, very interesting. And I think you would too. All right, so we are about 10 minutes in. Okay, I don't want to, like I said, I can go on and on and on about this stuff, but I want to be very careful. So I've only made a few notes, and so I could stay on point, but I want to make sure I deliver you some good content that gives this, makes it worth your time. Ethereum. We're going to talk about Ethereum in just a minute. Before we talk about Ethereum, though, I want to continue this Coinbase thing. So another thing that I found was interesting, and like I said, you may find it interesting, you may not, but in the news, it talked a little bit about, obviously, the CEO, right? Brian Armstrong is his name. So Brian Armstrong. Now, I don't find anything wrong with this, but just saying, good news, interesting. Kind of feel like, I wish I was him sometimes. This guy, Brian Armstrong, says, the article says that he owns 39.6 million shares of his company stock. Now, 39.6 million shares of his company stock. Wow. How many shares do they have? I mean, if the can you put that into perspective? The one person, the CEO, one person owns 39.6 million shares. How much do you think he bought them for? A dollar? He paid $39 million for them? No, I don't think so. If you know how cryptocurrency works, then you know that cryptocurrency, you may pay 0.0001 cent for a token or a coin. Did it happen that way? Nobody knows, because that's not information that they gave me. What they said was, my man Brian Armstrong owns 39.6 million shares of his own company's stock. And here's a more interesting part of that. Even though we know he didn't buy it for the going rate, he had to get it for a very, very good deal. Maybe he was the one that was sitting next to the person that created the stock, certificates and all. Wow, does he have 39.6 million stock certificates as well? Anyway, that just, scratch that. So here's the second part of that, the other side of the coin, if you will. This was before it was considered being listed on the stock exchange. But since it's being considered, they had to come up with an average price that it would go for. To get the right valuation, what price would be paid for the Coinbase stock? Well, the private market price, the average price, there's been some, between $35 and all the way up to $400 per share. The average price, if he could get the average price for those 39.6 million shares, they say the average price is $343 each. an average price for Coinbase stock. And our good friend Brian Armstrong, the CEO of Coinbase, owns 39.6 million shares. So that's interesting. Do you think, yes, this is a question. You can put it in the chat. That'd be great. Put it in the comments, wherever you like. Do you think that when they do hit the market and go public, offering some shares to the public, those shares would be worth or sold for in the range of $343 each? Do you believe that is going to be the case? That's the question. Or do you think they should be at $35 a share so we can all get some? If so, that would be amazing. And yes, that would take them to a whole nother level when it comes to companies that go public. Instantly putting them in a whole nother level. Now, that's company-wise. But what about the person that has the 39.6 million shares? If he is able to, which they already say that based on how they will run this offering, he is able, there's no restriction, there's no holding period for cashing in. So if he decides that he wanted to cash in on those shares right after the offering ended, it's said that he would raise his status to a very, very elite deca billionaire club. Very elite, I would say, to the tunes of the Facebook guy, Mark Zuckerberg. Obviously, he's one of the top 3. Elon Musk is one of the top 2. And top 1, that would be Jeff Bezos. So over $100 million. Yes, they're worth over $100 million. But we're talking multiple billions, right? Multiple billions. Hundreds of billions. So you got 3 guys that's over 100 billion. And that would be one Brian Armstrong. If this was to happen. How did he get there? How did Coinbase shoot up that high so quick? Because the article goes on to say most of the value and the wealth generation came in 2020 because of Bitcoin. I would say because of COVID-19, I would say. So that's what we should be thinking.